Alright, so now welcome to part 2 of the IMR of Friday 19th May 2017, and what we're going to do a little different in this IMR today is we're going to look at both the short-term and the long-term status of all the Nifty stocks. Also, the Nifty list has undergone a small revision in its constituents in the last couple of weeks, so we are now going to look at the updated list the latest set of stocks in the Nifty. We're going to look at two things. We're going to look at one, the weekly charts, and we're also then going to look at the daily charts. So I'm going to depart from our traditional approach, and what we're going to do is look at the long-term charts first, and then sort of get a sense of how the long-term trends are, and then we'll come back to the daily charts, right? So it's going to definitely be different from the way we've been doing things. All right. So let's start off in sector-wise order, and then within the sector, we look at all the stocks in each sector, and we are for this part, we are looking only at the Nifty stocks, the 51 indices which are there in the Nifty. All right, so looking at autos first, and in autos, we are starting off with the Bajaj Auto chart, and this is again, like I said, the weekly chart that we are looking at. So what you can see clearly on Bajaj Auto weekly is that the volumes have been pretty steady for the last many months, almost the last 2 years, and we are coming close to the top. If it goes there and retraces at around 3,100, we'll definitely get a double top. So that's the potential that is evolving. One of the things to consider along the formation for the double top is that you're not really seeing any great volumes as the stock continues to rise, and there is neither the sort of strength in the MACD or the RSI which was there in the earlier up move. So the up move becoming a little tentative. It's still an up move, no doubts about that, but you have to watch out for the 3100 double top potential. If it breaks 3100, then definitely 3500 could definitely be possibilities. So it's let's put this for people who are holding the stock. If you're holding the stock, you should continue holding the stock and watch carefully as to what might happen around 3100, and if there is a expectation that a double top is in place and it could then turn down, then obviously you should be looking at a stop loss or exiting your holdings. Fresh positions on the long side, yes, possible, but limited to about 100, 150 rupees, which is not bad for a trader. It's almost about 5% that we're talking about, and you could still look at that. No shorts on Bajaj Auto for now. Hero Motor Corp, again looking at the long-term chart. Okay, I haven't obviously seen this for a while, and if you look at this, more or less the same picture as we saw in Bajaj Auto, which is not a surprise. And what we have here is almost a tweezers top there on a weekly chart, and again some amount of weakness as far as the indicators are concerned. Again, very little volume happening in the last 2 months, 2 years, sorry, very steady volume, no great increase or decrease in volume. So nothing very definitive. Having said that, the overall trend is still certainly up, and whether the market can break out through this double top, tweezers top or not is to be seen. But we do have a double top in place right now on on Hero Motors, and quite possible that you'll get a similar picture on Bajaj Auto in the coming week or so. So the next week is going to be pretty important for both Hero Motors and Bajaj. If you see a red candle next week on the weekly chart here, then most likely going down by at least I would say 5 to 10%, both of them, and then we'll have to review. Maruti, so Maruti continuing to, just rear along, showing tremendous amount of strength. They're going from strength to strength as a company in models, their Nexa outlets, shifting more cars to that, getting a more premium feel. All that is there, and this, however, the uh, bearish divergence is a point to keep in mind. However, the trend is clearly up on the weekly side as far as the uh, longer term, say multi-month view is concerned. One important thing is the small candles that we are seeing in the last 3 weeks. The candles have become really small in the last 3 weeks. That's not really a good sign of a healthy uptrend. It's quite possible 7,000 is a temporary, resistance there. So the high is 6,000, sorry, where is I? 6979. 6979 is the high of this candle. So 7,000, probably a good resistance. Smart traders, quick fleeted traders could perhaps short with 7020, 7040 as a stop loss, and then it's perhaps coming back down to 65, maybe even 6463 before it turns back up, right? So the uptrend definitely becoming a little weak. The volumes again also not really that great, as you can see. So the uptrend becoming less strong, that's for sure. I won't say there's a downtrend, definitely not. But anybody long on this could perhaps start booking some profits, putting a stop loss. And if there is a short-term trade you want to do, even on this weekly chart, then it's more, at least in the short term, as in the next 1 or 2, 3 weeks, probably bearish rather than bullish, right? Okay. Coming to M&M, interesting. Interesting because looks like I've not looked at these charts for quite some time on a weekly basis. All right. So M&M clearly going now only sideways. Having said that, there is some interesting volume pictures which are building up uh, more on the bullish side. So M&M 2.5, 3 years of sideways move on M&M is how I would put it. We have, all right, let me put it there. So this is a resistance zone that M&M has, but you can see one thing in the last few weeks, so strong volumes on the bullish side have been building up. Just wanted to take this apart to show you that earlier we had put a rounding top. That was the neckline. Neckline got broken quite decisively, went down to the support, the 200-day moving average, and then is now trending back up again. So let's maybe just keep this there for future reference. We'll keep it as a pink line, and I can just bring this back. All right. All right. So somewhere near the resistance zone right now, M&M, but this is a consolidation type move for 2.5 years. Does M&M now, break out? And if it does, at around 1500, if it breaks out, then at least given the rectangle nature of this consolidation, the measuring implication is from about 1150 to say 1350 to keep it simple, 200 rupees. So about 1600, 1650, 1700 could definitely be possibilities for M&M, and the volume picture definitely sort of contributing towards that view. Then looking at Tata Motors, so Tata Motors 95 to now chart. Clearly a double top has come in place on Tata Motors, you can see, and this is a sort of pattern that may develop with Bajaj Auto and Hero Motors. So we have clearly a shorter term downtrend on Tata Motors there. Right. Okay. And it has come to the 200-day moving average, the cluster, and whether it is going to hold or not. Now, on the none of the indicators or the volume is showing any strength that it could hold right now. So if about 420, 425 breaks, then 400 and then 350 are quite distinct possibilities on Tata Motors over the longer term, right? I'm going to skip the Tata Motors DVR, more or less the same analysis as Tata Motors, except that the numbers are different. Moving on, iShare, right? So iShare, amazing story, right? The stock in 2009, 2010 was around 200 rupees. It is now 27,000 rupees. That's a massive, almost 150 point move, 150x move, just imagine. And this is where a good support is, and then in terms of resistance, this is where we are right now. All right, so good up move that has happened. I'm guessing some good result last week, good volumes, and the overall trend is definitely up for this stock, no doubts about that one. Okay, let me just right. All right, so don't want to be, you know, getting out of this too soon. Long-term investors should probably continue to hold Eicher Motors, and this could easily, I think go to 30,000 at least in the short term, and then perhaps even more. Who knows, right? So amazing chart. The trend is still up on the long-term basis, and the strength of that trend is clearly diminishing. You can see the strong trend here, it became stronger, and then that strength, the rate at which it was going up here and then here is dramatically different, right? Okay, but still definitely a good long-term hold. Bosch, so Bosch, uh, what, 2-year triangle? Yep, absolutely a 2-year triangle on Bosch. This is the life high to keep in mind. Is it going to break out or break down from this? Really nothing on the chart. Very neutral, very blank, not telling us or giving us any hint whether it's going to break out or break down. So till such time, better to wait and watch. The time to act will be if it breaks down below 20,400, get out of your longs. If it breaks out above 20,000, 20,500 here, and here 24,600, 24,700, if it breaks out on good volumes, then very likely going all the way back to 27,750, and then we will review at that time. For now, it's a wait and watch, do nothing, both from a long-term, short-term perspective. One thing to close on the auto side is that, with if the monsoons are good, then these things could get a kick on their a positive kick on their business, and that could drive these stocks even higher. All right, so that's on auto. Now coming to ACC and the cement pack, quite a few of them in the Nifty list. So what you can see very clearly is ACC a double top, perhaps a triple top here. So we have a shooting star there. We've got a big, massive bearish engulfing there. And then today, or rather this week, we've got two shooting stars and decent amount of volume on those shooting stars. So wondering whether we really have a strong resistance at 1700, 1720, and are we likely to go back down. What's a miss on that view is this strong volume here where it went up. This volume really perked up. So better to just wait and watch on this. If it breaks below 1650, then as a short-term thing, probably going to 1550. And if it can break out on 1770, 1735 with good volumes, then 1800, 1900, 2000 also should definitely happen. Because remember, again, in a sense, this stock has really not been doing much. Last 2 years, it's been sideways, as you can gather now. All right. Right. So range bound for about 2 years, 2.5 years. Is it waiting for a breakout? Looks like that. If you look at the volume picture again, the hints are more on the bullish side, I would think, than on the bearish side. Looking at this, which is the price volume action on the indicators, the PVT and the OBV, they are all looking actually quite bullish. And I think after maybe a small correction or whatever, it is all set to break out from 1700 levels sometime. I don't think it's going to take a quarter or two, maybe in a month or two, a couple of weeks, it could break out of 1700 and then go charging up to much higher levels. So that's what the volume analysis is suggesting to us. Right. Ambuja Cement, well, very much same picture, right? Really not very different from ACC. Usually they have a very similar setup pattern. There's some talk about these two being merged into a single entity. In a sense, they have similar parents. Forgetting the name. One of the biggest stakeholders in both the companies is the same. It's some Swiss company, if I'm right. And there's been some talk going on about merging these two. There's some announcement about it recently. So there is that issue, corporate issue to keep in mind. Right. Ambuja breaks, if it breaks 280 with convincing volumes, then this could easily go all the way to 300 and much higher. But keep in mind a sort of triple top there, and unlike ACC, which had fantastic volumes there on a similar day, Ambuja also had good volumes, but after that we had this big volume sell-off. No sell-off in terms of price, but definitely some I don't know, adjustments or stock movement happening, between ACC and Ambuja. Grasim. So Grasim is talking about the cement pack, definitely showing some strength. There is the old life high, which it didn't break out for what, 7 years, broke out here and then went from 780 to 1120 right now. Right, you can also see good strong volume pickup. So one of the things is that this 8-year resistance has not been tested as a support, maybe in a sort of small test here, but as of now we're looking at evening star here, could easily come down to 1000. So that's a psychological number to keep in mind. Just going to mark that. All right, so Right, so 1,000 rupees. Maybe it'll come there. Maybe it'll be a good place to get in. For now, the trend is still up. 1200 psychological resistance, probably headed to 1500. Why do I say 1500 or even higher? Because for 8 years it was stuck at 780. I really doubt whether a small move now is the end of the story. There's probably more upside left in the weeks and months to come on Grasim. Okay, so no shorting, but every dip probably should be used to buy to 1500, maybe even 2000 by the end of this year, 2017. Ultratech Cement, so it's really good, strong, long-term uptrend can be seen on Ultratech Cement. That is the long-term. Just make it yellow, more visible. All right. So Ultratech Cement clearly, going long. Sorry, going up, quite bullish. Little bit of hesitation with the developing higher shadows, but probably will keep accelerating. 4,500, 5,000 I would think is the next logical stop. Any dip, and it did that here. It came to 4,000 and languished there for almost 2 months before coming down to 3.5, and then 3.5 went to 4.5. Any dip down even all the way to 3.5 should be used to buy for 5,000 as a target. All right, so that's on cement in the Nifty pack. So ACC and Ambuja with important potential triple tops and potential breakouts or consolidation continuing. From the volume picture, it looks more like a breakout is going to happen rather than consolidation. Both Grasim and Ultratech having broken out, more upside left on that. Coming to the FMCG pack, coming to HUL, not in any particular order. So not sure why I didn't mark this green, but that's again your consolidation for 1 to 2.5 years on HUL, and you can see that that has now broken out, and you could see the evidence of that building up over the last several months, and last week and this week it has definitely broken out, no doubts about that. Let's move that there, and I would expect further upsides to happen on HUL in the months ahead. So cleared 1,000, it's going to take some time to get used to that 1,000 mark, and then it'll definitely go higher, right? Okay. ITC. Okay, so ITC again, this is also moved to a higher zone. That is the old life high, if you will, and this is the new life high. All right, so there you have it, going a bit of thing about a lot of this long upper shadows, but around 290, 300 looks like just some selling is happening. It'll probably get absorbed is my view. Remember that the GST clarification for all these FMCG things came out today. They were notified the rates. We are entering into a weekend. There'll be a lot of analysis, discussion, debate on this, and I expect that to be mostly on the positive side. So in the week ahead after 19th of May, you'll probably see FMCG tracking higher. All right, so those are the only two. We should probably look at the larger FMCG pack at some time soon. Now coming into oil and gas, energy, etc., starting with Indian oil. Right, so Indian oil, right, so had a split some time back. That was the old life high of Indian oil, and has just been cracking up, and just going up after that. So from 220, 215 levels when it broke out, it is now at 435. This was sometime middle of last year, and just going up and up and up. I would think that there is a lot more potential left in this stock. Indeed, all the oil marketing companies, OMCs, so one should not back off or divest in from that too soon. Right, so 500, quite possible. Let's see what happens. So once 210 goes, 500 is a distinct. I think, sorry, 210 went. Now it is 430, or more than double the money in about a year's time or less, and more upside I think is definitely left on Indian oil. Right. Uh, so no shorting of IOC. Maybe it'll come down to about 400, at which time you can go long. There's some drop in volume as you can see, but the trend is still strong and up. BPCL. So BPCL also for a long time had been stuck. This is a long time back. Since we're doing a long-term analysis, just making a mention of it. Had been stuck here at 200, and from 200 it has massively in what 1, 2, 3 years has gone from 200 to 700, right? So a large cap company which has tripled its more than tripled its value market cap, amazing, in 3 years. 750 seems to be a temporary stop there right now. Watch this red candle, may take the stock back to around 650, 600 levels, but from there it should probably recover and then go up. You can see also the big drop in volumes. There is some wait and watch that's definitely happening on BPCL. ONGC, so ONGC definitely uh, not in the best shape. A lot of its behavior is influenced by how crude oil itself behaves. So we had a nice in 2016, rounding bottom, really took off, went from 140 to 186 or 205, and then now doing a sort of correction, not anything substantial. Quite possible that this downtrend would break at some point, and then it could go up. For those of us who are perhaps a little strong-hearted, you could go long on this stock at current price at around 180, put a very strict stop loss around 176. If it does manage to hold 180 and the long-term moving average is there, then it could easily go back to 195, even 200, right? But again, this is a weekly chart, not the daily chart. Good support at around the 160, 170 levels. So that's the other scenario, that it could go down to about 170, and then one would take a look at that time on what next. Really no strength showing up anywhere in terms of the indicators, so maybe best just to leave it aside. GAIL, Gas Authority of India, so that's a triple top which you can see, 2010, 2014, and then now in 2017. This is something I've been speaking about for quite a long time, and the good volumes here are something to keep a note of. It's gone up, it's come back, it's corrected, and it's come back to 400, the psychological mark. It might come down even lower. It's left the moving averages really far behind, so it may come back, but I think in the longer term this is one thing to be long on. Once it decisively breaks out of 400, which it sort of has, except this correction for the last 3 weeks, the question is, where does this correction sort of end, and what would be a good time to enter? That is a little dicey. So you've got some, decent support there. That's at about 350. So one could put an alert for 350 on uh, Gale and see, if it does come there. It may not. Tough to say. Uh, but yes, if it does, or if you even enter now on a longer term basis, then keep adding till 350. If it breaks 350, then 300 becomes, I think, a possibility. At this point, looks unlikely that it's going to, lose about 25% of its price. But anything is possible in the market. That's something that we know well enough by now. But longer term, a multi-year triple top of 7 years, and in retrospect, when it does break out, you will probably see this going to 500, 600, 800,000 in a year or two, and then hopefully you'll be in that stock and made quite a bit of money. NTPC. So NTPC, not a stock I really like. It's a very lazy, very slow moving stock, and I really don't like to spend too much time on that. So I'm just going to move on. But it's there. 160 is a good price. Really nothing, no compelling reason to buy or sell. So leave it. Power Grid. So Power Grid. A really important level was 160. 2008 when it got listed, really went up there, came back there only in 2016. So that's one big many years of just languishing around, quite literally. And now it's, you can see that, how after it broke out at 160, and there was a lot of evidence building towards that in the volume. Massive buying has happened. So if you go to the price volume trend on, where is that? Sorry. Yeah, you can see this, massive buildup in volume over the last 1 year, 2016, and this is, most likely getting much higher. 250, 300 distinct possibilities in Power Grid, right? Okay. Let's put a shorter term trend line on that just for future reference. So that is Power Grid for us, right? So if it comes to 200, probably a good time to enter long, right? Okay. Tata Power. Okay, so wow. So mixed bag. Actual high is definitely higher, but it's come back to the 2008 levels. So big move in 2003, and then from 2005 to 2008, and then for the last 8-9 years, done nothing. Maybe now gradually setting itself up for moving towards 140. Back to those levels. Nothing great in the volume picture, and even if it does, if you are looking for longer term investments, I think we got much better ones in some of the cement opportunities and the oil and gas. So this is not looking really compelling. So I'm going to move on. Coming to Reliance. So Reliance, well, same old long-term story. I've been talking about this for months and maybe at least 2-3 years now. 5-6 year of consolidation. This year it broke out, really did well, and broke out from 1150 levels, or just shot up from 1050 levels, went all the way to 1450. Now it is correcting. How deep did the correction go? 1300, maybe even 1250 is a possibility. The volumes are clearly showing that there's strong buying interest. There's really no selling that is happening, but it could still come to 1250, maybe even 1150, and then from there go back up again. So long term, folks, this is definitely a good stock to be invested in for the next 6 months to a year. Having said that, 1150 is a possibility. The lower it goes, then the more one should be buying into it. All right, so that's Reliance. Uh, Lifetime high at around 1600, 1650. That is what one wants to sort of wait for, see how it behaves there, and then take a call on what next. All right, so that's all the energy pack. Now let's get into the banks. HDFC Bank, the private sector banks first. HDFC Bank, amazing multi-decade or two-decade up move. The stock was what, 10 rupees in 1998. It is 1,500 rupees now. So 150 times, just going from strength to strength. Again, want you to notice that it had a 1 year consolidation here in 2015. 2016 it broke out, went down, went up again, and it continues on that journey, right? So really nothing more to say. For a long-term person, stay invested. 2,000, 3,000, who knows where this stock will end up going, right? ICICI Bank, so this one has been a pretty massive laggard. 2008, it managed to break out only in 2014, made a new life high at around 375 in 2015, but has nowhere been able to come close to that. Got stuck in 2017 first half at around 280 levels. A breakout of that happened 2 weeks back, and now looks to set to keep going up. It had been stuck with NPAs and NIIs, net interest incomes being under pressure, but now seems to have gotten out of that rut and probably gradually climb to 380. So long-term investors, stay put. Kotak Bank, so this is one bank, one stock which is just going from God knows what to what. Uday Kotak, chairman, really very serious about developing his franchise. Bought over ING Vaishya. Now there's a offer for Karnataka Bank. So it's a little strange, while on the one hand the RBI and the government of India wants more banks, this is one bank which is eating up other ones, smaller ones. So you actually have fewer banks. So I'm not sure how that whole thing squares off. One thing to keep in mind with Kotak Bank, however, is very close to that psychological mark of 1,000. What happens then? Not so sure, but nevertheless, good volume buying, keeps going up. I doubt whether we're going to see any big fall anytime. Any correction should be used to buy into Kotak Bank. IndusInd Bank, so this is another one which has done amazingly well. 20 rupee stock in 2009, it is now 390 rupee stock, right? So this one showing a little bit of a rounding top, right? But there's a lot of good volume buying that has happened. Bit of a rounding top, whether it holds that or not, that is what you're going to have to watch out for. So that's where it is. May come back all the way to even 1300. Long-term investors should perhaps think about booking some profit on this, but really a very, very strong long-term secular trend on this, and could perhaps go even higher. Axis Bank, so this one is definitively stuck. Sorry about so many lines. Really not going anywhere, right? Let's clean this up a bit. Now, what we perhaps have here is a triangle, right? Yep, a triangle formation. Not really a triangle in the volume picture that you want to look at, but consolidation essentially of Axis Bank in the long term. 500, it's pivoting around that basically, psychological mark, nice number. Well, looking at most banks, it'll probably, go up to 580 or 600, and um, for those of us looking at it, yeah, you could. But again, long-term consolidation, good for trading, maybe not a great investment like some of the other ones, but yeah, sure, one could look at a trade here. Definitely a good stop loss around 460, 440, and could go all the way to 580, and after that we review. Yes Bank, this is just another one that's going from strength to strength. Right now at about 1600, really made an excellent move in the last 2-3 years. So is this now the end of the story for some time at least? That is the question to ask. A lot of high volume selling. You can also see that the buying volume has considerably dipped, and looks like this is coming, it has come all the way to 1395, 1400. Quite possible that it's dropping to 1300 or even lower. In terms of oops, yeah, so definitely high volume selling is happening on Yes Bank, no question of selling it. I would, although again not short it, but if I had any longs I would want to get out of it. This may be something troubling in the company or whatever, but if you have to be on the bank side, there are better banks which are better charts of other banks which are available. Right? Get out of Yes Bank. Okay, so that's the major private sector banks. Now coming to the public sector banks, this is State Bank of India. State Bank of India, again, been a consolidation uh, chart for what? Wow, 6-7 years. Move. Okay, so the high of SBI was in 2010, and it is definitely getting and inching there towards 340, 350 levels. The volumes are quite supportive of it, and this time if it does break 340, and remember all that stuff about bank reforms and bad loans and all of that, SBI definitely has its own share of it by virtue of being India's largest bank. uh, who knows, the stock could be from anywhere from maybe even 600,000-700,000 rupees in a couple of years from now. Just looking at the rectangle, we have 160 to 300, that's 150 rupees. So that itself makes it 450 rupees as the next target. 50% up move from here is quite possible in a year or two. Bank of Baroda, all right, so similar picture. Bank of Baroda, just like SBI, really nothing to write home about. Once it breaks 220, then this is definitely going much higher. So long-term investors should stay put, and if it breaks 230 with good volumes, which it looks like it will do, you can see a lot of volume activity here. Look at how low the volume was in 2010, 11, 12, and how much it has picked up in a little bit in 2014, but also in 2016 and even in 2017. I do think it's all setting itself to break out and then probably go much higher. HDFC, so not a bank, but anyhow, I don't know if it is, but probably India's largest housing finance company. Right. All right. So this is again 2015-2016 year of consolidation, and then in 2017, it's really gone up again, 1,600, headed towards 2,000, that's for sure. May correct to 1,400 or thereabouts before it starts to go back up again. All right. India Bulls housing finance. So here we have again about 2015-2016 consolidation. I remember 2 years back I was quite active in this housing finance stocks, and then sort of just forgot about them. For 2 years they did nothing, and then again now they are starting to move up. So 830 broke out sometime in, when was this? February 2017, and it has now become a 1,000 rupee plus stock. At some point all this will correct back to 900, 950. Will be a great time to buy it, but for now uptrend is very much there. All right. So India Bulls, looking at TCS. So TCS again, we're seeing a lot of consolidation patterns today. TCS, let me remove this, not really required, right? So went sideways for again 2014, 15, 16, 3 years going sideways. What's very, very interesting in TCS, of course, is that we're talking about all these visa issues and etc. But in the last 3 weeks, and especially this week, it's really made a massive move from 2,000, 280 to 2,600. That's almost about 15%, right? That's definitely impressive, right? So 6% move this week, right? And 6, 7, 8, 9, 10. Yeah, 10% move in 3 weeks. That's really something. Volumes this week especially coming out strongly in the favor of buying. So, on the one hand, we're talking about challenges to their businesses, but the stock is actually showing some good amount of strength, I would think. And the volume picture not really perking up that much on PVT, OBV, but maybe that's just because it's a matter of time. We'll have to wait and watch. All right. So TCS all perhaps set to really move up. Once it breaks 2,800, if it does that, then I would think at least another 1,000 rupees to 3,800 is distinctly possible on TCS. Infi, right, so you had this ascending rising wedge, sorry, and then that rising wedge clearly broke down, and then swiftly fell from about 1150 to 900. Triple bottom at 900 looks like, that too on a weekly chart. So that's something which is very important to note, and could possibly go up. However, the low volumes are little iffy. TCS was looking good, but Infi really not looking that good at all from the looks of it. Right, so that is where I would leave it, and I would like to watch out for how it behaves around that. No real hurry to pick it up. As a matter of fact, if it goes to about 1,000, 1,020, it might even be a good shorting candidate, but consolidating for the last 6-7 months, and it's got to make up its mind. Wipro, surprise, surprise, big, massive, move up. So one thing about Wipro, its life high is still crazily away. It's here at 1020. God knows when we're going to see that happen in this stock. but you take out the 1999 2000 price, this stock is oops, right. So we had this big breakdown which we kept speaking about in the IMRs for 2 years, consolidation, a big parallelogram type thing, a very vague head and shoulder top, broke down, went from 520 to 400, 410, and it's been a pretty impressive recovery after that, and big hammer here, and in the last 4 or 5 months gone back from 400 to 520, and could possibly uh, go back much higher. So it's come back to that resistance, as you can see, and if it breaks that, which I think it will, then all the way to 540, even 560 is a distinct possibility. So Wipro is another stock which is looking good and bullish on the IT side. HCL Tech, really wondering if there's anything significant to say. So this stock basically corrected all the way from 1050 to 700. Probably some internal problems which happened. This happened in 2015, 2016, and then it's sort of been on a recovery path ever since. So that's what we are seeing here. Let's look at volumes. A little not really inspiring. So could go all the way to 900, 920, and then maybe it gets stuck there. We'll have to wait and watch. So no opinion on HCL Tech. TCS and Wipro are great there. Tech Mahindra weekly chart. Okay, this is really interesting. We have a really nice triple bottom on Tech Mahindra, right? Okay, so very important triple bottom at 415, 420. It's been vacillating around that for 1.5 years now, almost. Looks like some interest of buying interest was there in the second half of 2016 and even the first half of 2017, but now whether things are changing, a little tough to say. But what one could definitely do is look at this as a potential low risk opportunity, buy at around 410. It's at 416 now, 410 if it does come down, and put a clear stop loss below, say 385, 400. It may not break down given what's happening elsewhere, and this is also a 2007 to 2017, so that's a 10-year support that we are sitting on. That's really significant, no doubt about it. If that breaks down with any substantial volume, much lower, great shorting opportunity, but it may not given what we're seeing in the other IT stocks, and this could perhaps just go back up to 500, who knows, right? Okay, so 500 from 410, 420, that's almost a 20% move that we're talking about. That's really good. Right, so that brings us to the end of the IT space. So this is good, except for Infi and HCL Tech, perhaps TCS, Wipro, and Tech Mahindra, looking at good buying opportunities, low risk ones, especially on Tech Mahindra. All right. So now coming to metals, coming to Hindalco. So one thing I'm sure some of us have noticed is that we still have not actually found a single good shorting opportunity. So while the broad indices and the markets were all quite bearish, really no sign of that in a single stock also, and that's really, it's not the first time it's happened, but every time it happens I'm really surprised. So this is the index being going up and down because of what is called sector rotation, or money moving between different stocks, but so the index itself may not go up or down very much, but individual stocks by turns and individual sectors by turns can do that. And it's a really interesting phenomenon to, in a sense, track and watch. Okay, so Hindalco, so what can we say? Wonderful move from 80 rupees to 200 rupees. Again, this was one space we had identified as part of the FA review about a year back, which, like I mentioned in part one of this IMR, the next FA review will happen in a couple of weeks. So hope to see you around for that. Okay, so this is 200 rupees, looking like a pretty stiff resistance right now. It is a multi-year resistance all the way from 200 2010. This breaks, then to 240, 250, clear distinct possibilities. One could go long with the stop loss below 174, 176. It breaks 200, 202, then 240, 250 on Hindalco become quite possible. Tata Steel, wow, I was really not expecting to see this. This is a massive move. Not sure what to attribute it to. Maybe some results today that came out. Really exciting. So this is one more company which has not broken its 2008 level of around 1000. Stock is still about half that price, so went all the way to 200, and then has recovered from 200 rupees to 500 rupees, and something this week, really massive move, massive volumes, and well, very likely this is headed up to much higher levels. Once it crosses that 500 psychological mark, Tata Steel is, in my opinion, going 600, 650 to those levels. Should definitely keep buying it, right? So Tata Steel, if you're buying it, stop loss below 410, 414, right? But unlikely it's going to go back there. 500 goes to 550, maybe even 600. All right, so that is Tata Steel. And coming to Coal India, so really a lackluster stock, stuck between 240 and 400 for the last 5-6 years. Really nothing to say for it. It has come to a support level, but given the overall picture, really nothing compelling in this stock. So I'm going to move on. No reason to buy it, no reason to sell it. Could break below 270, in which case it goes much lower, all the way to 250. All right, coming to pharma now. Pharma, starting with Sun Pharma. So clearly the best days of Sun Pharma for now are in its past. It was a 1,200 rupee stock. Now this is trading at 650. That's a big fall of almost half. But as you can notice, it has come to an important multi-year support resistance level. So this is a level from 2013, 2014. It's come there. Are we going to see a turnaround? Oh, well, yes. So here is something interesting. You can see a good bullish divergence which is there in this set of stocks. All right. So yep, there's some good buying there, good volume on the way up, good volume, low volume on the way down. This is definitely looking positive. It is worth taking this risk, in my opinion. Go long at around 650, stop loss below 595 is all for spot, and if it goes up, then at least 700, even 730 is a good possibility. And if it can then just keep going up, After that, you might get a new uptrend. So keep this trend line in mind for future reference. And on the short term, there is this trend line to keep in mind. So so gradually they'll be broken one by one, but this is really a good setup on Sun Pharma. All right. Yep. Dr. Reddy's. Okay, so this stock had gone to 4,500 and then it's come down to 2,650. Right, a lot of selling that happened in the beginning. Whether it has settled down now or not, little tough to say, but yeah, it could have. It definitely may be settling down. The very, very long-term multi-month picture is still bearish. I would say, after looking at Sun Pharma, Dr. Reddy's doesn't really look that compelling. Skip it. Right. Coming to Cipla. So Cipla, that's also really, just going sideways. 500, 550 seems to be a support. Really nothing in this chart to say there is a move that is been set up for it to move either up or down. Consolidating till it moves one way or the other, no view. Lupin. All right, so Lupin kind of looks like Sun Pharma, doesn't it? Right? Where is that? Sun Pharma. Look at this, and then look at Lupin. Right? Looking very similar. Okay, so this was the Li-Fi, a double top quite clearly. And then after that, this stock has been on a clear downtrend. All right, really nothing in terms of great support here. It has only 1 point sitting there, so really nothing substantial. Maybe this, maybe we had some recovery here, but really too early to say. Nothing compelling on the volumes, but again, for somebody who is willing to take the risk, you could buy it at current prices at around 1300. Put a stop loss below 12, 1240, 1250. But on the other hand, the trend is still very much down. Let it break this trend line, start to make an up move, and then we will talk about buying it. Neither should you short it actually. Oro Pharma. So all these stocks have been in a 2-year not very healthy phase. So is Oro Pharma really not looking that good at all, and clear double top, and then now it's come to, from 900 rupees it's come to about 580. Again, too early to say whether to enter. A bit too late to short probably these stocks, so just leave it, and yeah, let's move on. Okay, so pharma mixed bag. Sun Pharma looking like a good buying opportunity. Dr. Reddy's maybe, but not so great. Actually, 2,600, you can put a stop loss around 2,498, 495 if you want to buy, and there'll be some good resistance around the 3,000 level. Lupin also potentially, but downtrend is still there. Oro Pharma, I would recommend staying away from it. All right, coming to a few miscellaneous stocks which are there in the Nifty. So this is Bharti 10 years consolidation, as you can see, really, uh, not going down, not going up. Now, what's definitely, at least caught my attention is the fact that in spite of the Geo, you know, massive launch, undercutting, etc., it really hasn't broken from the 280 mark. Okay, 280 levels. The stock didn't break down. Very much staying within its 280 to 440 zone, and at this point, showing actually some good strength. Volumes also, showing that it's likely to go up. 400, even 420 seem to be distinct possibilities. So very interesting that while on the one hand the business is really under stress because of geo, a lot of competition, a lot of undercutting, price wars, all that, but the stock itself seems to be quite um, optimistic. So there's really no uptrend, but for a trader, yeah, you could look at buying it. Could come back to 340 and exit is only below 325, but if it keeps going up 400, 420, 440 are possibilities. Infratel, right, so had come all the way to that high of 500, and then after that this is where it is. All right. New listing, relatively speaking, so it's just been there since 2013, so about 4 years now. 300, 305 psychological mark, and the 200-day moving average seems to have broken out of that downtrend for now, except that we're getting this shadows on both sides. But yes, one could buy this. Stop loss below 340, and once it clears 400, then in steps of 10s and 20s all the way to 480 is a distinct possibility. L&T, right? So the only sort of infra stock which is there in the Nifty. Okay, so that was the old life high. Okay, I'm not sure why I have this anymore. Okay. All right. So this stock 2000 made a new life high in 2015, came back to 1100 in 2016, and now seems to be on its way back up. It has been downsizing. It laid off 14,000 people last quarter, and so making itself more digital, even though it's basically an engineering company. So the back end, a lot of stuff is happening there. But anyhow, I've gone into the business and fundamentals. Let's stick to the technicals. So this stock went up from 1350 to 1750 and clearly going sideways now. So consolidation. All right, and then looks like a flag. Okay, very clearly a flag from say about 1520 to 1750. So that's about 200, 250 rupees. It breaks out. That takes it to almost 2000, which means it will have to make a new life high. So both for traders and investors, one could look at getting into this. L&T is also doing a lot of restructuring of its business. Not hiving off for sure, but definitely restructuring and doing a lot of reorganizing. So 8 years, 10 years of doing nothing in terms of price, 2000 breaks, then who knows, it gets a new lease of life and may go to 4000, 5000, right? So that's LNT. Then coming to Z Limited. So this is another stock which, like a dot-com boom bust thing. Peak is at 835. The stock is still at 512. Little bit of concern now whether, so this dotted green line is, if the 2000 dot-com boom had not happened, then we would have said that the stock has broken out into a new life high. But anyhow, that's just wishful thinking at some point. So this one going sideways could be a good place to buy. Some volume happened last week, but nothing compelling. Slow and steady is probably the mantra of this stock, right? And for now, short-term resistance is there. Once it breaks out of that, breaks out of 550, then all the way to 750, 800 is a possibility. Asian Paints, so just another stock, massive wealth creation, 20 rupee stock, 1200 rupee, 20 rupees in 2003. Really nice, strong, secular, multi-decade uptrend, and the stock, rather the company is adding, products, it's adding services, it's adding premium stuff, high margin stuff, and so interesting, right? So for the long-term player, this is definitely a stock to, I guess, keep buying. Obviously, one wishes one could have bought it a decade or some time back, but yeah, looking at another next decade, paints in India should really do well, even if we have a economic slowdown. So 1200 stock, maybe, at some point it'll come back to 1000 rupee. Just wait to put 1000 rupees there. Psychological mark, nothing else. Or actually, that's the old resistance there. Let's keep which has been tested, by the way. Right, so went to 1200, came back to 900, and now it is 1200. So still upside, definitely there. Some weakness in long-term indicators, but I wouldn't pay too much attention to it. And once it breaks 1200, then gradually up and away to 1500, 2000 over the next, who knows, 1 or 2 years. All right, and coming to the last stock, Adani Ports in the Nifty. Well, that stock has come to its life high, right? And is it all set to break out, or is that a sort of, is one top here, sort of a multi-top top, and is it going to break down? Looking at the indicators and everything else, I would think that it's going to actually break out. So Adani Ports looking like it's all set for a breakout to happen, right? So yeah, for 360 breaks, then I think 400 quite easily, and then after that 500, etc. is quite likely on Adani Ports, right? Wow. Okay, so this is almost took an hour and a half. I wasn't expecting it to take so long, but so be it. I think so. What's really surprising is for the long-term investor, there are plenty of opportunities in the top line Nifty stocks. Not a single shorting opportunity. I am honestly, very surprised given the overall state of the markets that we saw in part 1 of the IMR. There for your picking amongst all the many sectors which are there. So if you have a 6-month, 1-year horizon, you've got some really good technical picks which are there. You could just divide your capital into many of this. There could be a 10-15% correction in any of these if the market's overall correct, but some of them are really showing some strong setups. And wow, uh, really nothing to short. If there's anything, just cautious on the long side. On the other hand, some things are clearly good buys on the long side. So amazing. So strong uptrend. Well, I have to say that there's definitely a strong uptrend as far as individual stocks are concerned, right? So on the long term, we did not do the short term. Maybe I'll do this over the weekend, or we'll do this for the next week, given that it already took 1.5 hours. But the Nifty stocks really, from what we started with expectation and what the charts are saying, almost very opposite, and the long-term picture looking quite healthy. So hope you make the best of it. All the very best. Remember that some of these up moves are in the region of 50 to 100%. Again, from a 1 to 2 year horizon, and that's a fantastic return, right? That too in large caps. So thank you very much for your listening and participation, and I hope to see you again next week. If we do have a short-term review, I will announce that as a separate post, right? Thank you and have a great weekend. Mokari Maka. Bye.